This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Carol Massar, Tim Stenovec. And I got to say, Tim, here we are, Thursday, February 19th, 2026. But we have seen this movie before. Heightened geopolitical risk playing out in the markets. Those worries sending stocks lower, definitely off their best levels of the session. And we've seen a move, an upward move, I should say, when it comes to oil specifically. And we've got gold also hovering near a key level.
Yeah, that's the backdrop for this hour. As far as stocks look, the S&P 500 down about 0.4%. The NASDAQ composite down about the same. Normal Linda's going to have more in just a second on the markets. On the markets, the stocks that are actually moving today, one of those is Figma. We're going to be joined by Dylan Field, the co-founder, CEO, and president of the company. I guess investors are not as worried about those AI scare fears.
Yeah, we want to go through their quarter, their outlook, and maybe how that calms investors down a little bit. All right, we're going to get into that. Speaking of AI, we've got an update on its role when it comes specifically to medicine, healthcare, telehealth. We're going to do that with the chief medical officer over at Boston Children's Health. It's somebody we have talked to a lot over the last year, so looking forward to catching up with her.
And Wayfair shares down about 13% right now off of its latest report. We're going to speak to Kate Gulliver, the chief financial officer of the company, on what the consumer is or is not up to right now.
All right, pulling up my most read on the Bloomberg terminal. And if I do so, I come across this story. It has to do with blue oil. Blue oil. Where'd that hat come from?
You're thinking about oil, Iran tensions,
Those
the price of oil
synapses,
higher.
I'm not quite sure how they really work.
All right, we'll do a reboot during the break.
We are going to talk blue owl, canary in the private credit coal mine. We kind of asked. This is something that's been on our radar, I feel like, for several months here, but we're going to get into the lowdown, what you need to know on this Thursday. I'm going to give it to you because I'm just doing so well today.
Well, and I'm going to send things on over to Nora Melinda. She's in for Charlie Pellet. She's standing by in the Bloomberg Businessweek studio. Hey, Nora.
Hey, Tim. We check markets for you all day long here at Bloomberg. U.S. stocks falling after heightened geopolitical risk weighed on sentiment. We see the S&P 500 lower by about 0.4%. That NASDAQ composite index down 0.4%. And the blue chip Dow Jones Industrial Average falling 0.6% lower. Taking a look at the volatility in the market, we do see the VIX index pushing toward 21, and the yield on the benchmark 10-year Treasury yield just below 4.1%, and that policy-sensitive 2-year Treasury yield at 3.5%. Oil jumping, we've been talking about it. The rising risk of an attack in the Middle East is impairing risk appetite near term. We've got West Texas Intermediate crude trading at about $66.54 per barrel. Economic data out this morning showed U.S. pending home sales fell in January to a record low as buyers remained unmotivated by lower mortgage rates and slower price increases. Bitcoin rising after a 2-day slump, up about 0.9% to trade at $66,885. And digging at some of the individual movers, we see Walmart shares are rising after the company issued a full-year earnings forecast that fell short of analyst estimates. So we are seeing a bit of a reversal there from earlier in the trading day. And moving over to shares of Deere, they're climbing for double-digit gains after the company boosted its annual profit outlook, anticipating a long-awaited upturn in the agriculture economy. And lastly, I've got my airs on shares of Klarna, plunging for a brutal day. We're down about 25% right now as we speak, less than 6 months after this company IPO'd. It's reported 2 consecutive quarters of losses and is struggling to convince investors to hold on for future profit. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Nora Melinda, and that's a Bloomberg Business Flash.
All right, got it. Nora, thank you so much. Carol Massar, Tim Stenovec, live here at Bloomberg headquarters in New York City. All right, we are watching shares of Figma. They're up nearly 8% at its intraday high today. They were up even higher last night in the aftermarket. This is after the company came out with its latest quarterly update. So the stock rallying after the design and product development platform. It's a creative software maker. They do a lot of interesting stuff. They gave an annual revenue outlook that topped estimates, so kind of eased some of the Wall Street anxiety that's been out there that the business is threatened by the emergence of rival artificial intelligence products. And if you're not familiar, I mean, they do some really interesting stuff.
Yeah, they got a cloud-based design prototyping tool. It's largely used for creating UI and user experience for websites and mobile apps. The stock so far this year down about 34%, 8% of the float is shorted. Goldman, Morgan Stanley, Carroll, RBC, Stifel, JP Morgan, Wells Fargo, just a few though. They've lowered their price targets on the stock today. The stock down about 80% from its IPO. That was last July.
Investors don't care though. We see the stock definitely rallying in today's session. All right, let's get to it. With more on the quarter, the outlook of the company, joining us from San Francisco is Dylan Field. He's co-founder, CEO, and president of Figma. Hey, Dylan, so good to have you here with Tim and myself. We do have to address, though, I mean, investors have been nervous about you guys. The stock's down about 80% from the post-IPO highs. And we've seen the software space in particular, investors kind of trying to figure out the AI impact on lots of different sectors, including yours. So grappling with the defensibility of Fig's moat against AI native players and competitors, or the potential for general AI efficiencies to kind of weigh on seats. So walk us through, should investors be worried? What impact is AI disruption really having on your company?
Yeah, well, first of all, thank you for having me, and really appreciate the chance to be on the show with you. I think it's, I can offer always a point of view, but I can't tell investors what to think or not think. They're going to do that on their own. But for us, 2025, we look back on as a massive year for Figma. And our fourth quarter was our best quarter yet. We saw growth acceleration. We delivered $304 million in revenue last quarter. And that represented an accelerated year-over-year growth rate for the quarter of 40%. And for us, we look at the business and go, okay, as AI gets better, Figma gets better. And I think everyone should be thinking that way. As AI gets better, does your company and your products, do they also get better? We're also shipping faster than ever. Last year in 2025, we went from 4 to 8 products. And we also launched over 200 features, and that growth and that momentum has not slowed down. The velocity continues, and actually this week, we just launched a integration with Claude Code, where Claude Code can now go to Figma Design. So you can take the code you're working on and then take that state of the application and then move it into Figma Design. We can talk more about the benefits and why we did that later, but we're really excited because right now we are seeing people start in so many different places, whether it be a terminal, a prompt, or user interface design tool like Figma. We want to make sure that Figma is the place where it all can come together. And that's the platform that we're building. And if we can do that, I think that we are in a place where we can capture a massive opportunity. So we're very focused on building that platform to make that future possible.
Still, I wonder about the message to investors who may be concerned about LLMs or just AI actually affecting your core business or your core features as the stock of the company gets lumped in with sort of like all of the SaaS play and this idea of a SaaS apocalypse. What would you say to investors out there who are a little gun shy when it comes to software stocks right now?
I think that the best thing to do is to actually understand companies from first principles. And again, to me, the first and most obvious test is, okay, if AI and models are getting better, which I think is everyone's base case right now, that we're going to continue to see really significant increase in capabilities, then does the company get better too? And for Figma, we passed that test. We are, a year ago, we didn't have any notion of AI credits in the platform. Now we see more than 75% of our paid customers who are over 10K in ARR, they're consuming AI credits every week in Q4, as of Q4. And that, I think, speaks to some of the traction that we're seeing with our AI offerings. And also, over half of our large customers, they're building with our product Figma Make, which is a way to go from prompting and Figma Design to working application. Over half those large customers are building in Figma make on a weekly basis. And so that's up, by the way, from 30% in Q3. So significant increase, 30% to 50%. And I think overall, the platform is just very well positioned if you think about the product development lifecycle. Not everyone is thinking in code. A lot of people want to think visually. And if you can go create that map of what the software can be, and if you're not just urgently driving towards a solution, but rather you share our point of view, which is in a world of ever increasing competition in software, you don't just need to make a product, you need to make the best product. You need to lean in, actually have design as a differentiator, craft as a differentiator. You need a point of view. Then you need to select from this infinite option space out there of possibilities and curate the ones that are actually the best options for you to go build. And that's not work that is done in code. Code is linear. It's a linear process. You need to go and actually consider the full option space to go build the best thing. And that's what we're trying to enable for our customers.
So how do you think the world, I mean, Dylan, this is great because I think we're trying to understand, especially when we see these sectors impacted by this AI scare, of just trying to understand how this is unfolding. And yet, kind of, would you agree that the AI disruption that we're seeing unfold and maybe impact certain sectors is kind of happening a little bit faster than we expected? At the same time, everybody seems to come on and say, we're really early in, when it comes to this process. So even if you are kind of somewhat upbeat, would you concede that we're not quite sure exactly how this might shape your company or, how this all impacts how we work going forward? I mean, there's still a lot to be figured out, right?
Well, I think, again, there's frameworks you can use that are good tools here. Yeah. So, for example, I think that you can broadly bucket verifiable versus non-verifiable, and perhaps it's a spectrum, not a binary. But math, for example, as verifiable as it gets, you can understand if something that is a math theorem that AI generates, is provably correct based on formal verification systems. And because of that, we're going to see incredible progress in mathematics. I mean, it is just amazing what we're going to see in math. Code is closer to math in terms of its verifiability. Design, totally not verifiable. You could have 5 designers in a room debating what is the best design, and you could get like 10 or 20 or 30 opinions from those 5 designers. It is something that is very subjective. And yet, if you get it right and you can lean into craft and you can lean into design as a differentiator, that is how you're going to win in software. And also, it's not just that SaaS companies are software businesses and that's it. Every company is a software business today.
Yeah.
And so I think that every company really needs to figure this out. And if they can lean into design and really treat it with the reverence it deserves, then I think they will have a path to winning. But I think the ones that don't are going to have a hard time.
Well, part of that path includes spending big when it comes to AI and working to improve those features and bring those features to your customers. How much are you spending on AI tokens? How much are you spending on the models?
Yeah, we are not trying to be a frontier lab, first of all, just to be super clear about that. That's a game that we're not playing. And kudos to those that do. They are our partners, and we're very lucky to partner with them. And also, they're our customers. And it is, I think, very exciting to see how they're using Figma to help shape these surfaces. But yeah, you can see the spend around inference show up in our gross margin. And I think that we did well to hold that flat. And definitely, we're always looking at ways to be more optimization focused, but also you can see it as a proxy through how Make weekly active users, which we disclosed as well, grew 70% quarter over quarter. And I think that the way that the overall activity is growing the platform as it relates to not just that, but also the way that people are using some of our AI image generation capabilities and other AI features in Figma. Is really just a start. Like, we believe that Make in Figma Design, and Figma Design is our flagship design tool, whereas Make is about going from prompt to working app with Figma. We can try to bring those surfaces closer together, because so many of our users that are using Make on an active basis are also using Figma Design. It is the majority case by far. And so if we can bring those closer together and have them live as one experience, and help people really think divergently, explore option spaces, but also use their hands, get into it. You don't want to prompt and say, change it to 12 pixels spacing, and then it takes 2 minutes to go see if you're right or not. Like, you want to go have that direct manipulation flow state and actually see what it is that you want. I think there's things that are going to do in prompt and things that are going to do with direct manipulation with design tools like we've done for a while.
A really interesting conversation, especially Dylan, against what we've been seeing playing out in the market as we've tried to figure out what AI is going to do to different industries. Love it. Thank you so much. Really appreciate it. Dylan Field, he is co-founder, CEO, and president of Figma. Figma shares, by the way, folks, they are still up more than 8% in today's session.
Hey, let's get to one of our most read stories on the Bloomberg. It's another gut check, perhaps, in the world of private credit. Again, this one involving, yes, Blue Owl Capital. Shares tumbling after the decision to restrict withdrawals from one of its private credit funds raised fresh concerns over the risks bubbling under the surface of the $1.8 trillion market. We've got Bloomberg News leverage finance reporter Olivia Fishlow joining us from New York City. Restricting withdrawals from a private credit fund, never a good sign. Investors reacting.
Hi, guys. Yeah. So basically what we've seen here is that this is one of Blue Owl's funds, a non-traded BDC, that they decided yesterday to ultimately restrict redemptions from. But what they did instead was they've sold loans from the portfolio in order to start paying investors back and winding down this vehicle.
So help us understand, and I think, we've only got about a minute or so here, but it's just, what do investors need to understand this? Because we've been following Blue Owl for a while. Go back to Jamie Dimon's comments when it comes to private credit and, never just one cockroach. And then Blue Owl Capital's CEO, co-CEO Mark Lipschultz came back and defended it. And I'm just, is everything okay? Or do we need to be, is this kind of, cause for concern here? And what should we be watching to see? Because Ares Management's down 5%, Apollo Management's down 6.5%, Blackstone is down 6%. Just got about 40 seconds here, Olivia.
Definitely. Yeah, it's a fair question. And I think what investors need to be thinking about is these are retail vehicles, but they house illiquid private credit loans, right? And in this situation, Blue Owl was able to sell some pieces of these loans in order to make up liquidity and start to pay investors back. But as of now, they've sold around 34% of the portfolio. So they still have a ways to go of loans to sell to make investors whole. So I think the concern that investors are starting to see is, well, when I invest in these vehicles that promise the ability to receive cash back, will I actually be able to get that money back?
Right. We talk about this, especially as there's been a push to open this up to more individual investors, 401ks. It's not as liquid as a lot of other investments. Olivia Fishlow, she's Bloomberg News leverage finance reporter. Really appreciate it. Coming up next, the CFO of Wayfair.
It's 2:21 p.m. here on Wall Street. We check markets for you all day long here at Bloomberg. I'm Norma Linda. First, let's take a look at some breaking news just crossing the Bloomberg terminal. Johnson & Johnson is said to explore a $20 billion plus sale of its orthopedics unit. Keeping an eye on shares of Johnson & Johnson, we're seeing them higher by about 0.5%. And over to broader markets, we see U.S. stocks are falling after heightened geopolitical risk weighed on sentiment. The S&P 500 down about 0.4%. That NASDAQ Composite Index down by just the same. And the Dow Jones Industrial Average lower by 0.6%. Looking at the volatility in the market, we see the VIX Index just above that 20 handle. And digging into treasuries, we see the yield on the benchmark 10-year treasury just below 4.1%. The policy-sensitive 2-year treasury yield at 3.5%. And back to oil, we see the rising risk of an attack in the Middle East is impairing risk appetite near term. Looking at West Texas Intermediate crude currently trading at 66.45 a barrel. Economic data out this morning showed U.S. pending sales of existing homes fell in January to a record low as buyers remained unmotivated by lower mortgage rates and slower price increases. Separately, U.S. jobless claims fell by the most since November to 206,000, adding evidence of stabilization in the labor market. A quick look at Bitcoin, we do see it higher by about 1%, trading at $67,000 roughly. And digging into an individual mover, we see that shares of Booking are lower by about 8%. That's after the company reported better than expected first quarter gross bookings, indicating continued strength across the travel industry and announcing a 25-for-1 stock split. Separately, we do see that DoorDash is also in focus, up about 2.9%, the largest food delivery service in the United States, surpassing Wall Street's expectations in terms of outlooks for orders. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Nora Melinda, and that's a Bloomberg Business Flash.
All right, got it. Nora, thank you so much. Well, shares of Wayfair, we're keeping a watch on that one, dropping a lot, down about 16% at their lows on earnings, a 4-month low intraday as active customers during the fourth quarter came in slightly below street expectations. Now, the street weighing in on the results, William Blair saying that the 6.9% growth in net revenue likely fell short of buy-side expectations, but you had some peers, RH, our house, and also Williams-Sonoma under some pressure in the trade. So investors looking at the group overall. Let's get a little bit more on the outlook. We want to head to Boston.
We got Kate Gulliver back with us, CFO of Wayfair. Kate, good to have you on the program. Tell us a little bit about the quarter, because interestingly enough, Jefferies says this is attributable to colder weather to start the year. Anything about the guidance regarding is about colder weather?
Yeah, well, maybe let's step back and sort of speak to the quarter we just reported, then I'm happy to shift to guidance. We feel really great about the quarter we just reported. I think it highlighted and capped off a year of incredible momentum for us. We opened up the year flat. We, exited the year at 7% revenue growth, 8%, managing for the exit of Germany. And we flowed through to improved EBITDA. EBITDA grew year over year about 60%, right? So we're seeing both ongoing market share gains and improved profitability. And that story continues with our guide into Q1. We feel really good about the guide, the mid-single digits revenue growth and improved adjusted EBITDA throughout the quarter. So, when we look at it, we feel that we produced pretty strong results.
Yeah, you look at the quarter, adjusted EPS better than what the street was expecting. Adjusted EBITDA, as you said, coming in stronger. Net revenue up about 7% year over year. Gross margin coming in better than the street estimate. There were a lot to do. So maybe we talk a little bit about, I am curious, you guys have dealt with the call and so on and so forth. What are you hearing from the investment community that they're not just so comfortable with, Kate?
Yeah, actually, as we talk to investors, I think, again, they're pleased with the momentum that we see here. Mm-hmm. Obviously, we're in a category that has been under pressure, right? So the category itself, we think was down low single digits in the fourth quarter. To your earlier question sort of around weather in the first quarter, we do think the category has been impacted in the first quarter of this year. Likely, down low single digits again, maybe slightly worse even than Q4. So there's certainly some complexity in the overall category here. What can we focus on? We can focus on what we can control. And our share gain continues to be a real source of strength. You see us outstripping the category by several points, right? And that's continued, Q3, Q4, and then again into the guide in Q1.
And we should point out that investors have been really keen on your stock. Nearly doubling over the past year. Kate, let me just go to what you said. Maybe it is those concerns about some softer active customer trends kind of early on in the first quarter. Do you give us an idea of what you're seeing and any idea, or can you tell if that continues?
It's a great question. So active customers is one of our reported KPIs. It's actually a lagging indicator.
Okay.
That metric is LTM active customers, so anyone who'd sort of placed an order within the last 12 months. And as orders grow, and you do see that order volume grew in Q3 and in the quarter we just reported, Q4, that sort of precedes active customer growth. The other thing I do just want to point out there is we did exit in January of last year German business, so that took a large chunk of customers, or not a large chunk, but a chunk of customers out of that number. And so as you're looking at that active customer number, obviously that came out. So we'll clear that comp. We exited that in January of this past year.
You did say the sector has been under pressure, and Carol mentioned some of the peers. But what about the Wayfair consumer when they're buying something on the platform right now? Are they buying it because they need to replace something in their home? Are they buying it because they have extra money to upgrade something? What's the profile of the consumer? And in other words, how is the consumer doing?
It's a great question. We're seeing a few trends. So you mentioned some of the sort of luxury peers. Obviously, we have high-end brands that do compete with those players like a Perigold or specialty retail brand. The Wayfair brand itself, plays all the way from opening price point to, upper-end mass. So really spans the full range. And we have seen, a divergence, some of that K-shaped economy I'm sure we've all been talking about now for a bit. Certainly our Perigold brand or specialty retail brands are growing, really north of 20%, we said, in 2025. So you can see that accelerating beyond, the overall core business. And I think that speaks to the strength in that, higher net worth consumer. We also do see a bit of a divergence in the types of things that people are buying. When I talk about the category being down low single digits, that's a category overall. We actually think furniture or bigger ticket items are down more. That tends to actually be where we, are more focused and have a bigger part of the business. But, we also, of course, sell decorative accents, seasonal decor. That part of the business seems to have done a bit better from a category perspective overall. So those would be lower ticket items, that may feel more comfortable for folks to purchase right now.
Well, and the other thing I want to ask you, and listen, Kate, we're obsessed with this, the buy now, pay later. And you can do that on Wayfair too. Are you seeing an uptick in that?
Yeah, we have a number of options, for various financings and buy now, pay laters. We work with a wide range of partners. I do think it's an important offering for the consumer. So, to, sort of ensure good underwriting for folks and provide them with a lot of optionality. I would say our penetration there has been lower than other more traditional brick and mortar furniture retailers. So, as we grow, we're really trying to get to, sort of a more natural place there for the furniture industry overall.
We're speaking with Kate Gulliver, CFO of Wayfair, joining us from Boston.
Kate, one of the other things that we've talked with you about is the physical stores, and you have noticed some encouraging early performance from the physical stores when it comes to brand engagement and cross-channel lift. As you think about, or as you kind of move from proof of concept toward potential expansion, what specific performance thresholds are you kind of focusing on and would justify accelerating the physical store growth?
Yeah, it's a great question. So we look at the economics of the store itself. So purchases that are directly attributable to the store and the economics of, operating that store. So as you think about the overall store four-wall P&L. But one of the unique things about, building stores and you already have a well-established e-commerce brand is you do get to see a benefit in the area for the brand overall. But the other thing that we look at is, what in sort of industry parlance you might call the halo effect, but really sales that are attributable to folks that maybe came into the store and then, left and went and bought something or, had an idea about the store being in the area because they've heard more about it and therefore then shopped on our platform. And we've seen that continue to hold in really nicely. We gave a stat in our updated investor presentation today that the first store, which is in Chicago, if you look at the entire state of Illinois versus the rest of the country, since the store opened, it's had a 10% CAGR higher than the rest of the country.
Wow.
And that gives you a sense of, the momentum that you can get from the store. It's obviously a very crude metric, but it's an easy way to sort of explain it. So we really look at the combination of the store P&L and then the other benefits that come along with having the store.
Well, that makes me want to follow, what metrics would cause you to maybe remain a little bit more cautious? So, if you open another store and the metrics aren't, so you're not seeing that kind of momentum that you're getting in the Chicago store, would you just say, okay, maybe it just depends on the city, the environment? There's a lot of specifics that can go into it.
Yeah, I think our focus right now is on learning more about what makes a great store, right? Okay. So we have one store open. We're planning to open 3 more in 26. We have one opening soon in the Atlanta area. another one this summer in Columbus, and then in the fall in Denver. These will be, the Columbus store, for example, is 70,000 square feet versus the, other stores are roughly around 150,000 square feet. So we're testing out a slightly smaller format. We're testing out different types of shopping areas where we put the store. And so we intend to learn and then continue to refine the store model based on those learnings.
So
we are quite excited about it as a channel.
Yeah. Kate, let's go from sort of like the old school store retail model to then what you're doing with AI and layering in AI.
Don't you call stores old school?
Oh, they are. I mean,
they're coming
but
back,
if you think about
right,
even
Kate?
Wayfair's
omnichannel.
model, though.
We like the overall omni-channel experience.
But how do you layer in personalization with AI?
Yeah.
And I'm curious how you do that in a way that actually makes you more competitive in this area.
Yeah, we're really excited about what we can do with AI from the customer experience perspective. And we've already started some of that and piloted some of that on the site, and there's certainly more to come there. I think this category is a bit unique in that respect because it's a category that is a highly emotive category, right? It feels very personal to folks. It's not a commodity category where you're doing sort of standard replenishment. You want to, get a better sense and see the actual options out there. The brand is important. Our brand is important because you want to ensure the delivery experience is high quality. So we think that the category itself lends itself to bringing people to our site and engaging them in a unique way. One thing that we can do with AI is help get more personalized for your style preferences. I'm sure if the three of us were to pick an end table, we'd all pick different end tables. What we'd love to do is make sure that when we land on the site, we're serving up to each of us exactly that end table that we want. Generative AI allows us to do that in a faster, more nimble way. It also allows you to play around with discovery. So if you were to go on the app today into the Discover tab, you'd see a whole catalog of images, and you can create more yourself if you want, that are, Gen AI created that then allow you to shop the catalog based on the type of room that you're designing or the aesthetic look that you're looking for. And I think that kind of engagement and interaction is really compelling in this category.
So I know, Kate, if we had asked Tim, like if we were going, you, me, and him shopping for pillows, he would say, no more pillows. I don't know about your household, but that's what happens in my household.
Just get in the way.
Fortunately, people have an insatiable demand for pillows, so we will keep selling them.
Thank God, thank God. Always appreciate getting time. It is a great read on the consumer and finding out what's going on. Kate, be well. Thank you. Kate Gulliver, she's the Chief Financial Officer of Wayfair. It's true. My husband's like, what are all these pillows?
Yeah,
what do you mean I can't use them to sleep?
To sleep, yeah. And then you put them back on after you make the bed.
I have a little bin on the side of the bed.
Where do you put them?
Do you have a bin? I have a little bin that I put them in while I sleep.
All right.
Because you're not supposed to sleep with them.
When we come back, Washington's impact on medicine and science. The Chief Medical Officer at Boston Children's next.
It's 2:40 p.m. here on Wall Street. We check markets for you all day long here at Bloomberg. I'm Nora Melinda. U.S. stocks are falling amid heightened geopolitical risk weighed on sentiment. And we do see the S&P 500 currently lower by about 0.6%. That NASDAQ Composite Index falling 0.7%. And the blue chip Dow Jones Industrial Average lower by about 0.9%. Keeping an eye on the volatility in the market, we see the VIX Index pushing above that 21 handle. And the yield on the benchmark 10-year Treasury just below 4.1%. And moving over to the policy-sensitive 2-year Treasury yield at 3.5%. Oil jumping. The rising risk of an attack in the Middle East is impairing risk appetite near term. We see West Texas Intermediate crude currently at $66.53 per barrel. Economic data out this morning showed U.S. pending home sales fell in January to a record low as buyers remained unmotivated by lower mortgage rates and slower price increases. Moving over to Bitcoin, keeping an eye there, we do see Bitcoin higher by about 0.6%, currently trading above that $66,000 handle. And some of the individual movers that we're keeping an eye on, shares of Carvana, currently lower by about 9.5%. This after higher than expected costs dented its fourth quarter profit in a sign of growing pains as the company pursues rapid growth. And an eye on retail, Walmart shares currently lower by about 0.7%. That's after the company issued a full year earnings forecast that missed the average analyst estimate. The retailer pointing toward the need for flexibility amid unpredictable times for consumers. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Nora Melinda, and that's a Bloomberg Business Flash.
All right, Nora, thank you so much. Carol Massar, Tim Stenovec, live here at Bloomberg headquarters in New York City. Well, Bloomberg Opinion's Lisa Jarvis is out with a column this week. She's a former executive editor of Chemical and Engineering News. She writes about the first year of the Trump administration and the first year of HHS Secretary Robert F. Kennedy Jr., and how his changes have shaken medicine and science in the U.S., leading to a loss of confidence in health agencies and wreaking havoc on public health. So we wanted to get a view with a great voice that we've talked to and leaned on in the past year or so, here to talk about the macro environment for U.S. healthcare and the ever-growing role also of technology and AI. That's top of mind as well. Let's get to our Bloomberg Businessweek Women's Health segment, where we focus on key issues and developing technologies impacting the present and future of women's health around the world and really health more broadly. Great to have with us Dr. Joan LaRovere. She is Chief Medical Officer at Boston Children's Hospital, and she's, of course, out there in Boston. Dr. LaRovere, so great to have you back with us. How are you?
I'm wonderful, Carol. Thank you so much for having me back again. Love being on your program.
Well, Tim and I are glad to have you back as well. We have leaned on you and your team a lot in the last year. I do want to ask just broadly a macro view about what our Bloomberg Opinion columnist wrote about some of the changes of the past year that have come when it comes to childhood vaccine schedules, chaos at the FDA and CDC, what it's really mean, and just trying to understand, because it does feel like over the year when it comes to Washington, some things get dialed back, are more rhetoric than action, but you are at a front seat or in a front seat to all of this. Tell us about the macro environment when it comes to running a healthcare institution, a hospital in this environment. What impact has the White House had on all of you?
Well, there's always change in macro environments. I think that is just the nature of the world. And it is an important time in terms of so much change globally that we're living through. Certainly, I think, as I've said to you in the past, our focus here at Boston Children's Hospital is entirely on our mission. How do we get the best, most high quality care and access to children, both in Boston, New England, nationally, internationally, for the many, many children that come and seek care from us. And we also act, I think, as a world opinion leader in healthcare for children. And we really just focus on that mission, Carol.
Is that mission, though, not necessarily the mission of Boston Children's, but is the idea that the U.S. has these facilities, and the U.S. is a leader when it comes to being at the vanguard of this research and this treatment. Is that at risk with the pullback in funding?
Well, we'll see what happens with funding, Tim. I mean, as an institution, thankfully, we've weathered things and we're still full steam ahead in terms of our research, our innovation, and our care for children. I think it is super important that we continue to invest in healthcare as a nation, and particularly in the science and the research that drives the innovation engine of this country and creates the new therapies. I mean, I think that's the real moment of this time. The science is opening up and unlocking the potential for new therapies, new cures. And I think the data and AI, as we've spoken to in the past, is opening up opportunities for us to understand disease in ways that we've never been able to before because of the scale and the ability to look at data in these new ways.
And I have to say, Joan, I think Tim and I felt that and saw that firsthand when we were there and did a live remote broadcast, and to see all the kids. And I think, you think about a hospital environment and it can be difficult, stressful, and it was really warm and loving, and these kids and these families. It was pretty striking for all of us, and to talk to members of your team about what they are doing, and then the role of technology and the importance of R&D within a hospital framework and what it can lead to. So talk to us a little bit more about AI, because I think we spend so much time every day. Tell us how it continues to impact your world and how it's helping in either the care of kids, children, and even women's health overall.
Sure. Yes, I definitely. I love to talk about that topic because I think it's unlocking the capability to understand things at a more personal level. We're in early innings of this, where if I think about it from the hospital standpoint, we're making sure we're getting the right tech architecture and infrastructure, because that is so important to maximizing the capabilities. And as I spoke to you before about the work with Virtue Foundation, similarly, we're putting in place the right tech architecture and infrastructure to be able to see across a global lens in low and middle income countries. So I think the first piece is that you need the right architecture and framing of the data to be able to unlock what's in it. And we're very focused on that here at the hospital. I'm very focused on that in terms of the work of Virtue Foundation, because that is the opportunity of our time. And I think we're going to be able to get into much more personalized care and understanding of disease and disease across populations, whether that's gender or race or environment, physical environment, how these things are impacting who you are and how you are progressing through illness.
What's the promise of success there for our kids, for future generations, like within our lifetimes? What does that actually look like if we achieve what you think we'll be able to achieve in the coming years?
Well, I know this segment is focused on women's health and longevity, so I'll move to that sort of as an example. If you think about what happens in pregnancy to a mom and a woman, what are the signatures? If she has preeclampsia or risk of Alzheimer's and dementia, I think you had Dr. Fanny Elahi on the program talking about some of that. There is biomarker signatures starting from early on. They're going to tell you something about a trajectory. What does it mean for that child if the mother had preeclampsia or the mother had diabetes of pregnancy? Does that have an impact on the child's long-term health? And how do we think about that if it's a female baby? What happens as throughout the life cycle in terms of hormones? So starting her menstrual cycle, we know from, I think you had Martha Murray, our chief of orthopedic surgery on, we know that girls are more at risk of an ACL tear when they have their menstrual cycle, right? These are the things that get unlocked in the data, and we can start thinking about it longitudinally. Bone health is being laid down in that moment in life. How are we measuring it? How are we thinking about it? And how will that link to a menopausal woman who now is thinking about osteoporosis when you probably should have been thinking about osteoporosis over the 51 years before that?
Yes.
Now you're hitting menopause, right? So Carol, that's a subject near and dear to all of us. What is the data that we actually have on that? How do we actually think about women as they're laying down heart disease, metabolic disease, hypercholesterolemia, Alzheimer's, dementia?
Joan,
we can start to understand this, I think, in a much better way and open up opportunities.
Amen. We're going to continue this in the future. We'll be right back.